This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices climbed to almost $120 a barrel on Thursday, their highest in nearly a decade, as sanctions disrupted Russian oil sales, but the rally lost some of its fizz on rising prospects for an Iran nuclear deal that could add extra supplies. Benchmark Brent rose to $119.84 a barrel, the highest since 2012, with additional support coming from data showing U.S. crude stockpiles had hit multi-year lows. By 14:16 GMT, it had slipped back to $112.75 a barrel. Brent has jumped by more than a third in the past month. The contract's 6-month spread hit a record high of more than $21 a barrel, indicating very tight supplies.
Commodity prices surged still higher on Thursday as Russia's invasion of Ukraine disrupted global raw material flows, sending gas, coal and aluminium to record peaks while crude oil and wheat scaled multi-year highs. Russia's stature as a top supplier in oil, gas, metals and grain has meant that harsh sanctions applied to Russian entities following Moscow's invasion of Ukraine has derailed critical resource supply chains. The invasion has upended the markets, supply chains are ceasing to work, which means we have dislocations all over the place, said Ole Hansen, head of commodity strategy at Saxo Bank in Copenhagen.
Moving on to the top news in the energy sector.
Sanctions imposed by the European Union on Russia over its invasion of Ukraine would gradually hit Moscow's income from oil, despite not targeting Russian oil and gas exports directly, the EU's energy policy chief said on Thursday. The 27-country EU has imposed several packages of sanctions on Russia, including a ban on the export of specific refining technologies to Russia from Europe, making it harder and more expensive for Russia to modernize its oil refineries. These technologies are built in Europe, they cannot be easily placed globally by other suppliers, European Commissioner for Energy Kadri Simpson said.
The United States on Wednesday took aim at Russia's oil refining sector with new export curbs and targeted Belarus with sweeping new export restrictions, as the Biden administration amps up its crackdown on Moscow and Minsk over the invasion of Ukraine. The new round of sanctions announced by the White House ban the export of specific refining technologies, making it harder for Russia to modernize its oil refineries. The White House also applied a sweeping set of export restrictions levied against Russia last month to Belarus, arguing the controls would help prevent the diversion of items, including technology and software, in the defense, aerospace, and maritime sectors to Russia through Belarus. Next, we have the top news in metal markets. Global copper smelting activity slid in February, partly because of Lunar New Year holidays in top producer China, data from satellite surveillance of copper plants showed. After falling sharply, however, activity in China rebounded towards the end of the month, according to a statement on Thursday from commodities broker Morex and Savon, a satellite analytics service it launched with EarthEye in 2019. Only one major, Chinese, smelter, is now observed to be on a period of extended downtime for maintenance, the statement said. EarthEye, which specializes in geospatial data, tracks 94 smelters representing 80 to 90% of global production. It sells data to fund managers, traders and miners and publishes a free monthly index of global copper smelter activity.
Benchmark Dalian and Singapore iron ore futures surged on Thursday, buoyed by growing hopes of improved demand for the steel-making ingredient in China after reports of a possible easing of COVID-19 curbs in the world's top steel producer. The most traded May iron ore contract on China's Dalian Commodity Exchange ended daytime trading 6.8% higher at 797 yuan and 50 fen, $126.27, a ton, after soaring as much as 9.7% to its highest since February 11. On the Singapore Exchange, the front-month April iron ore was up 7% at $159.55 a ton, after touching a contract high of $162.40 earlier in the day.
We will now look at the top news in the agricultural sector.
China's wheat prices on Thursday topped 3,000 yuan per ton for the first time this week as the war between two major wheat exporters, Russia and Ukraine, has fueled panic in a market already worried over a domestic supply crunch, traders and analysts said. Wheat prices across several key demand hubs in China, the world's top consumer and producer of the grain, have jumped by more than 100 yuan in the past week, with bids as high as 3,250 yuan per ton in the south, data from Shanghai intelligence consultancy showed. Domestic wheat is rising like crazy, said a manager with a major trader.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.